All right, there we go. Go ahead, Parsa.
Okay, as you can see, we have the 15-minute chart here. Left side, it's going to be AMD. Right side, it's going to be Tesla. So what I'm trying here, I turn off the pre-market and aftermarket because they're doing a lot of noises here. So just focus on the market hour. That means New York session here only. The thing that I'm trying to catch here when I see an exhaustion, for example, a return point. When we look for today, we have here up, 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 up. Then we had a long wick here. What I like to see is here a closing candle nearby here, like that one here. If I see something like that, what I put is, for example, it could be I'm coming in the last second with the closing price, or I have a limit order. I put it here in the middle of the wick. My stop loss is usually somewhere between $1 to $1.50 actually. So that's the reason I'm not buying that much. So here would it be, for example, something here. And then I'm looking something that we had, for example, the breakout. The breakout happened here actually. If we look here, the breakout was here. So my TP is going to be somewhere here. Okay, so that was something that I catch today. Something else that I found out here, for example, when we look at AMD here, again, 15-minute chart here, we had a big candle here. It took 1, 2, 3 candles here to close here nearby again. And if you have something like that, it's always a sign of return again. Again, we have a huge candle here. It took 1, 2, 3 candles. 45 minutes here. What I do here is I come out with the closing price here. Since AMD is a little bit more volatile than Tesla, and I have in here usually and stop loss again for $1.50. So here's gonna be somewhere here like that. And the next point is we're gonna be my exit point. The exit could be somewhere here. The closing price of the huge candle here, or I can also take here the wick here. It's up to you then. So it's only you're trading only in 15-minute chart, and you're trying to find the exhaustion point. And when you find it, your stop loss is going to be a little bit bigger. It's going to be something like $1.50. But on the other hand side, your target is going to be at least 3 hours. Sometimes if you look here, it's almost 1 to 10. It's 1 to 8, something like that. And I'm seeing that for a while. I'm testing that almost for 1 month. And since I got good results here, I wanted to share that with you guys. Since awesome. We're community here.
Yeah, no, that's great. Thanks for sharing. It's interesting. Again, I like the simplicity of it. I like that you've refined it so it's this simple and you're getting results with it. And it sounds like something you can do easily.
Yeah,
and you know that's one of the most important things in trading. It's got to be a strategy that comes easy to you. If you have to fight yourself all the time, then it's a problem. So this looks like for you, it's coming easy.
Yeah,
and you're trading a big time frame, big candles. You know, it's good. I like it. Good stuff. Not many people do stuff like this. Talk about trading on a bigger time frame.
So again, here, if you have a messy day like this, see here, it's really messy here. But what we got here is, if you look close here, it was a little bit clean here. So we had 3 candles in row. So it's one like this. And with the wick here, it shows again exhaustion. What I did yesterday, I said, okay, with the closing price, I'm going to come in. The stop loss is going to be below that one here, somewhere here. And now it will definitely go trying to catch the high here. So my target was here. Again, as you see here, is somewhere between 1 to 3 or 1 to 4 risk to reward.
Yeah. Good. You got the asymmetry built in as well. Good.
Yeah.
That's always the key.
Yeah.
I like it. I like it. Cool.
Okay.
Anyone got questions for Parsa here? He's got a style of trading that I think is really brilliant. Very simple. You can do it on your phone.
We got that here too. 1, 2, 3 candle here, and again it shows an exhaustion. Since the pullback could be a little bit, I don't know you cannot have a tight stop loss here. It needs to be somewhere between $1.5. But on the other hand side, your target gonna be at least three times of it.
Yep.
Yeah.
Target's always 3R is like it's an absolute bare minimum. But
Yeah,
I mean, you're getting that. You're getting that regularly, so that's all right. Cool.
Hey, sorry, what's the strategy? I just came in. I think I missed the main part.
The strategy
Or
of it,
if
15-minute
if
charts, and you turn
yeah.
off the pre-market and aftermarket on only trade AMD or Tesla. You can try it with other stocks as well. I tried it with NVIDIA, PLTR, but I wasn't that successful. I remember when Avi was telling us with a fractal pattern, for example, it was not working on Apple or something like that, Microsoft or something like that. It's like the one here too. I would only stick to Tesla and AMD, and I like to see and reverse it one. When we look here, for example, what I was telling here, we had a huge candle here in 15 minutes. It took 3 candles to come the opening price back. And when I see the exhaustion here, from that point, I know I can start a long position. Your stop loss should be somewhere between $1.5. And your target could be somewhere here, for example. Or if you are risky enough, you can go even higher than. So that trade is going to be somewhere between 1 to 4, 1 to 5, something like that. And the other one was here. If you see, it's going straight up, 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 up. And I have a huge wick here. And I wait until a candle get close by here, like that one here. You can come in here, right in here, or put a limit order here. And stop loss again is somewhere $1.5, and I tried for the target, the breaking area for retest, what always Avi is talking about. So I got out somewhere here, I think, and it was somewhere between risk to reward was 1 to 8, something like that.
Very good. Everyone got that? Any questions for Parsa? Explained it a couple times now. It's a good one. I think it's very good. Naked trading really becoming efficient, you know, even with the tickers. It's great.
Yeah.
Nice. No, good work, man. Good work. I like that.
So then I will stop presenting if no one has any question anymore.
Sure.
Okay.
Yeah. Good stuff. Thanks. Thanks for sharing that. I love to hear stuff like that. Now that's really important. You know, I always like it when I see people who are taking the initiative to figure out a style of trading that works for them, rather than just copying anyone out there, copying me or those webinars I've done or anyone else. You know, because in the end, the strategy that anyone is using is the one that works for them, which is a reflection of the way their mind works, which is not you, your own mind. Everyone's unique, right? So you got to use your own mind and perceive things your own way. And really bring that out in your trading. Otherwise, you're just going to be fighting yourself, and that becomes difficult. So, of course, you start with some basics. You know, you understand that what a consolidation looks like, what's a bullish trend, what's a bearish trend, you know, stuff like that, basic stuff. But you build on that. You really got to build on that, and that's when your own trading becomes very, very powerful. And it goes into something else, and it's obviously something you've created, so it's, you know, completely unique. The whole world has never seen it before, and that's what it is. That's when it works. That's when it gets bigger, more powerful, and that's when you become more confident. And even and the confidence counts for a few different things. You can survive the learning curve. Sorry, the drawdown periods, the losing streaks. You can survive those without freaking out. And also, when the times comes to scale up and put on more risk, you can do that as well with more confidence. So it all, you know, flows one step at a time. But that all comes from independent thinking and not clicking on everything out there that says this is the only strategy you ever need, right? We all seen that. Everyone's seen that. So I think that's really good. That's what Parsa's done here. That's good. That's what I've been doing for a long time as well. So try and do that, guys. Thanks again, Parsa. Very good example. I like it.
You're welcome. I was inspired by the naked trading by Avi, if it wouldn't be for yours, I would have still trading with AME, RSI, MACD, whatever is out there. It's crazy.
Yeah. Well, good, man. I'm glad it helps. I'm glad it's helping. Cool. Good stuff. Well, naked trading, I've been looking at this just in the last half hour. Put a level down there, pretty obvious. There's been lots of support, but more recently you can see momentum going down. So I'm interested in this area, and going into the 1 minute chart, it's been interesting. I was considering to take this retest going down. You can see there 1 minute chart consolidation with lower highs, breaking kind of a retest, but this is not a great one. It's come back, perhaps doing the retest now for the move down. But there's a few things that are weird here, where this retest here has gone a bit higher in than I'd like. You can see the wick here. Just looking at this candle, there's a massive amount of selling right on this candle. And now up here, it's gone higher up, which I don't like to see. I like to see it lower than that. So it's telling me the sellers are stepping lower. So I'd have more conviction going into it if this in the last few minutes didn't go that high. So if it was here, for example, just 5 minutes ago, this would have been interesting, but it wasn't. So yeah, I've been looking at this while we were talking. I don't see a great setup. It's so, but it may go, it may not, but it's not all there. But also looking at this 15-minute chart, I've talked about the momentum. It's one big momentum candle, but you're still getting buying down here at the bottom. So overall, it's not great. It's okay. So anyways, lots of reasons to stay away from this one. But if it was there, then I put the level down here, which is nothing more than looking to the left and finding that there was a trend going upward right here most recently. And then I'm just looking for where that trend began. It turns out it began right here. That looks like resistance, and then it broke out from there. So if I'm going short, that's the target area. That's basically it. I was hoping to get into this, but the 1 minute chart just not working out at the moment. Yeah, it's making a higher high compared to the previous push down. It's not very clean. Anyways, it's almost there. It's one of those that's like 85% there, right? That's almost good enough. It's tempting, but not quite. So we'll leave that one alone. Anyone get anything good today? Anything fun? We all know Parsa is doing. He's trading the 15-minute chart on his phone from a ski lift somewhere in Germany, right? Getting all kinds of trades.
By the way, when it comes to S&P 500 and Nasdaq 100, because I also trade those two only in 15-minute chart. Because instead of trying to get the right position in the 1 minute chart and to get stop loss 1, 2, 3 times and to get, I don't know, emotional, I do it with the 15-minute chart. Maybe the risk to reward is not like 1 to 10. It's somewhere between 1 to 5 and 1 to 8, somewhere there. But again, only one trade instead of 3 or 4. It's easy.
Yeah, much easier.
It's sometimes maybe at 5-minute chart, because 1 minute chart, it's not clear. It's too much. But actually, you need only 15 minutes. That's it. If you ask me, actually.
Yeah, no, it makes sense. It makes sense. The 1 minute is very noisy for most people, but everyone gets excited about it and starts trading it. It's not for everyone. And going slow now, you're going more with the swing trader mindset. It's easier to look at 15-minute candles. It's almost like a screenshot, really, and you can make simple decisions based on that. And as you said, only one trade, so you make one decision instead of 5 decisions. Makes life a lot simpler, right? And we all know how tricky trading can be, so we want to make it as simple as possible. Nothing wrong with the 15-minute, especially if you're trading the futures market, which is 23 hours, right? So you can still get 5-to-1 kind of trades on a 15-minute chart because you can allow it the time that it needs to go. That's a good thing. I mean, a lot of people struggle with just getting 3-to-1 and 5-to-1 with just a 1 minute chart. I mean, that's most of the trading world. But if you can get 5-to-1 on a 15-minute chart, well, it's perfect, isn't it? So, good stuff. I like it. Let's look at this 15-minute chart. Let's see what we can pick up here. You got this descending wedge pretty much at that level. You get the breakout retest happening now in this zone. You put the stop up there and enter right now. You're still getting, I don't know, this is probably 4-to-1, 5-to-1 on the way down. if it works out. So not too complicated. Cool. This is an interesting area on the chart right here. You can see it where after it got up there, it's just lots of buyers been sitting there every time. And then just now, at the moment, broke down through it. The sellers seem to want to take over and hold below. So I think it's a very interesting area. If you can find that setup for the short here, it would be okay. But again, for me, it's not setting up the way I like it. It's a little bit too messy. I'll wait for another one. If you guys are doing levels first, I'm typically doing price action first, but levels first, a lot of guys are looking at levels and trying to find different ways of picking levels. One way that I've done it over the years, I haven't talked about it much lately, so we can do it now, is look for big wicks. So you can see right up here, there's a big wick right there. After you put that on, you can see it's pretty well respected, right? If you go further back, there's a big wick right there. I would just put the level right there and just leave it. It may go down there if it goes. You have another one right here. Big wick, as in it's on its own. It's got room to the left and to the right. Just put it there. And there you go. It's bounced off of that area just now. So a simple way of doing it. If you're getting too complicated about levels, you don't have to. Just find a big wick on a big time frame. So this is a 15-minute chart. You can do it on whatever time frame you like. See another one right here, right there. Sure enough, it came down. Consolidation. There's your breakout, and again a bounce off. Not very difficult. This one's interesting. I may use this. There is room to the left and right. And yeah, looks like it bounced there, got messy, and then consolidation, then the breakout. Yeah, this one's a little trickier. But really, you just want a big wick where it got there and it moved away from there quickly, like this one, right? And room to the left and to the right. Then it's very simple. Let's see where else. We have this one here, right there. Let's zoom in a bit. And it didn't get there so fast. You want to see a parabolic move. So this one's not great. This one makes sense right here. Straight up, straight down, and then look at that. If you were long here, that's your target zone. Pretty obvious one. And you're getting a reversal setup here. In this case, it wouldn't have worked, but the setup was there, right? So anyways, a simple way of doing levels. If you don't want to make it too complicated. A lot of people overcomplicate this stuff. So try that out if you like. But again, I'm really not doing this at the moment these days. I'm watching price action more. So I'm watching momentum, and then I'm putting the level on it, on the momentum. A little different. But yeah, it's good fun. Either way, whatever works for you. So what else is on your minds, guys? Who else got a strategy to share? We had Parsa already. Anyone got something unique, something a little different? Something you're working on, something you're trying? We can explore it together if you like. That's always fun. Well, yeah, I got into one at the open today, which was this drop here. And before that, I got into one long, which stopped out. I don't know where that was. Was that here? No, that would have been, I don't even know where that was. Maybe here someplace. Got long and stopped out, something like that. Let me see if I can find where that was. Yeah, these three candles. You see these? I gotta zoom into this. These three white candles going up. So I figured that's the momentum beginning. So it looked like this. You have three candles, right? After all this consolidation. So that's when I put the level here. Figured let it bounce off and go. So it came in, bounced off, got in the entry, and stopped out pretty quick. That was one. And then a little later on, got into the short in this area, which was more based on the 1 minute chart than anything else. But we can go into that. You have this area here. See if I can find that trade. Yeah, right here. This is not typically what I do these days, but it's I happened to be watching it around this time, and it was so blatantly obvious. I'm like, wow, this is, I've traded this setup a million times. You guys have seen this over the years. Just a typical 5-minute ABCD, plenty of momentum. It was just looking at me. I couldn't help myself. I'm like, all right, fine, make some money. No big deal. So here's the open, went up, came back down, and once it comes back down and breaks the low, that's your 5-minute ORB, basically, goes down. Then it does that consolidation before continuing down. So if you isolate that, look at it this way, you have that reverse ABCD pattern, right? With the context of this whole area being the ORB. And this is so obvious. You can just call it a breakout to the downside, because that's your ORB breakout. Either way, anyways, consolidation, get the short, and the target zone was there. And the target was, let me see, how did I pick the target? I think on the 15-minute chart. I don't even remember. Here somewhere? Oh, here we go, yeah. This makes sense. I think it was here. See, this was resistance, and it went from there. I think this was it. Oh, no, that was way further back. No, that doesn't make sense. I don't even remember how I got it. It would have made sense here. Yeah, pretty much that area. See the support in this area? Getting short there and just taking it off. Something like that. Anyways. Or maybe, was it lower? I don't even remember where I put it. But anyways, a very simple, very basic kind of setup. 5-minute ORB. It was really slow. It was easy. Did it on the phone. And I just happened to be watching it today, so I got into it. It's not normal. I don't normally watch the open.
You still had the muscle memory of the market open, maybe.
Yeah, I had it. Yep, I had the muscle memory. You're right. That's where it came from. Yeah, and it was just so I don't know what I was doing. I think I was just waiting for my kids to finish their snack or something, and when I saw this thing, I was like, okay, do that. And but the reason I stopped trading this stuff regularly is because of the RVR. When you're really getting it right and you're nailing it every time, you get 3R. If you're really outstanding, you get 5R. But really, it's it goes nowhere near 10, 20R kind of positions. That just doesn't happen with ORBs. So that's why I stopped. But yeah, you're right, Jasmine, about the muscle memory. It's all there. Done a million trades like this with tremendous leverage, with options, multiple, or what we call simultaneous positions like this on at the same time. Done that so many times with leverage. So when I saw this slow moving one, I was like, okay, no big deal. Not exactly what I'm looking for, but I know how to do it, so I did it. Easy enough.
Yeah, at 9:30, I also have the tendency to, the urge to check the market, but as you said, the reward is not there, so I have to tell myself, don't look. There's no need. There's literally no need to look.
Yeah, that's the tricky part. The risk reward is just not there. I mean, it's fun in a way that you get a resolution quickly because it moves fast. So you either stopped out or you make money and you find out quickly. There's no waiting period, so impatience doesn't become a problem. But I mean, really, if you're struggling with that kind of impatience, I believe you don't deserve to make $1 million out of the market. If you're struggling with that, you really got to get over that and think bigger, do bigger things, much bigger. There's so much more in the market. It's outrageous. So much more. So that's why I don't make it a routine to go and check the markets at the open. Today, I just happened to have some time on my hands doing nothing. Surprisingly, I was just like, okay, well, now what do I do? And I saw the time, like, oh yeah, it's New York. Let me go have a look. That was it. It's not routine. Anyways, it was there. I don't expect myself doing much of this. Okay, look at this one. If you want to see a big trade, check this out. This was straight up, right? Let's move this level out of the way. Going straight up, and you can see these white candles right here. Big, and then it slowed down. This was closer to indecision than bullish. And then the reverse hammer, room to the left right there. And sure enough, it never tested the top of that hammer. You got that short, man, you've made $1 million today. Now, that's a 10, 20R kind of trade. And Parsa was talking about earlier, trading the 15-minute chart. So if you get your entry, the way I like to do it is put the entry at the new low, stop above it, and then, you have a bottom right there. That looks like a double bottom. You can just target that zone. It's already 10R or something big, whatever, and you don't have to fuss around with it. Just leave it alone. So a near perfect setup. Oh, and there you go. There's the level as well, right there. So it's in that vicinity of the level. So if you're looking for reversals, I mean, this was perfect. You don't mess with it. Just leave it alone. That's the kind of trade I'm looking to get. Those are the trades I target more. I just wasn't looking at this one at the time. But yeah, this is good stuff. more. See, you can see the difference. Trying to get in here and just leaving it for 12 hours compared to getting in here and then you're out here. You can see the difference in the stress level. Firstly, in trading this smaller stuff, and also then the RVR is just not there. It's just not there at all. Not even close. So you don't want to mess with it. But look at this one also. Again, reversals. If you have, like we were talking about earlier, put your levels at big wicks. Got a big wick here, right? Room to the left, room to the right. It's all there. Reverse from there. It came back down. It gave you a good looking double bottom. Not perfect, but a good looking one. And just on the 15-minute chart, if I was trading this double bottom, I'd put my entry here, the new high after this bullish candle with the stop below the price action, and target the top area. I'd probably target up here rather than the very top, probably in this area. And got there. This would have taken a few hours, but I mean, again, 10R, right? No big deal. So that's the way you want to trade. That's the way I'm trading these days. You can even do it on a 15 minutes, not too complicated. You got to remember though, with reversals, you want an aggressive move in one direction. So in this case, look at this thing, bearish, coming all the way down very fast, right? And then you get a reversal. Then it works. You don't want this. This is messy. This came down fast, right? But then it got messy before going. It did reverse, but then you're trying to catch it in this area, you're going to get chopped up terribly. Once you notice it's starting to chop around, you don't want to mess with it. But it does have the context. The context is it went firmly in one area, in one direction, then reverse. That's important. You want that fast move to the level and then reverse it. Even this one had it. Fast move to the level and then reverse. But now, right now, it's not been moving fast. It's been chopping around here, grinding down slowly. So there's no way I would be thinking about a reversal here. It was only a short, if anything. And I was looking at this earlier. What happened now? Yeah, seems to want to go. Oh, look at that. You got that reverse hammer. There it is. Wasn't looking. That's the setup. That's your short 5 minutes ago.
Can I say something?
Yeah, go ahead.
I think it was on Monday. Could you go back again? There was where you had the double bottom.
Yeah, right there.
Yeah. Do you see the candle? Yes, you have to go to your right with the big wick, right side. After that,
Yeah.
No. Go back the other way. Yes. No.
Here? Up here.
Here. Yeah, exactly. If I see
Okay.
something like that, I don't even at a certain level. If the candle is talking to me, sometimes I put a limit order. But if I see something like this, that's clearly for me a pullback here. That's like something like, I don't know, what is it called? A bullish flag. That was the pullback with the closing price. I would come in. The stop loss would be below it, and then yes, there I would go in.
Yeah.
And yes, there, and the stop loss would be below the wick actually, and I would go all the way up there. From there, I don't need even sign because the candle is already showing an exhaustion. So I'd like to turn up again. For example, that was like a pullback only. So I like to keep going up actually, and it's going to be again not 1 to 10 probably. Sometimes yes, sometimes even 1 to 12 or more. But usually somewhere between 1 to 5 and 1 to 7. But instead of having 4 or 5 times to trying to catch it in 1 minute, so only one trade in a 50 minute, and you're still making good money here.
Nice. Yeah, I like it. Very good. You're keeping away the overtrading problem with this style.
Yeah.
That's really good. That's really good. You got a nice mechanical way of keeping away that problem. That's a problem everyone's got. So there you go. I like it. Good. Pretty straightforward setup. There you go, guys. If you have struggles with overtrading, then trade some bigger time frame. 15-minute works just fine with the futures market. No problem at all.
As
Good
we
stuff.
saw it working with stock market as well, because
As
that
well.
was the reason why I got inspired. Actually, I saw your videos. You're talking about 50 minutes, and I was thinking, is it maybe possible to use that in the U.S. stock market? And I saw, yeah, it's possible, especially to those who are very volatile, like AMD and Tesla. They are perfect, actually. Or there is another one. It's called Burl, I think, BURL, for example. It's the same like Tesla. It's going up and down every day, at least $15, for example. But you only need those 2 stocks, actually. I'm currently, for example, myself, when it comes to indices to the future markets, I'm trading only US Tech 100 and S&P 500 because sometimes they don't have equal movement. You have, for example, a movement here, not there. So I will decide which one I'm trading. If they look equally, usually I go for US Tech 100. But if they're not, I'm going with the one which is showing me, which is giving me a signal when it comes to my opinion. And again, and when it comes to the US stock market, I'm trying right now with Tesla and AMD, but I would encourage when you're trying, do that only with 100 shares or 200 because you need a huge stop loss here, not only 30-40 cents, you need at least $1. So keep that in mind, guys.
Yeah, nice. So I like that. Again, you took it and you got curious, and then you applied it to the stock market and figured out which ones it works on and which ones it doesn't, or which ones it's more likely to work on.
Yeah, because I am, and again, I remember when you used to say the fractal pattern, which was your, let's say, naked trading strategy 2.0. For example, I remember you said for Google or Meta, or was it, I don't know, Apple is not working that much good. And I saw, yes, when it comes to NVIDIA, it's not perfect actually here. Because since NVIDIA got in stock split a couple of years ago back, it's no longer how it used to be, for example. But currently for AMD and Tesla, it's working perfect.
Nice. I love it. I love it, Parsa. It's good stuff. Again, guys, the key thing is you see Parsa's come to a conclusion so far on what he sees and how he likes to see it and how he can execute it. But what I really want to highlight is that he's taken the initiative to fly with his curiosity, just explore it and see what you come up with. That's the real key point. Amazing. It's truly amazing. I mean, I did the same thing. I'm still doing the same thing. I'm always doing that, actually. Always curious about different ways to move forward. That's how I got into the options world. Before that, with the fractal patterns. And then applying that to the options stuff and figuring out how you can day trade options, then the zero DTE thing. And then going just to the SPY options, all that stuff. It was just, out of curiosity, start exploring it, little back testing, do some sim trading, and you stumble upon something that you're like, oh wow, this is wild. And you know what? It's worth the time. It's totally worth it. You can take a whole year just being curious and trying 100 different things, and you'll stumble upon one thing or two things that really makes sense. And it's worth that 1 year to spend to do that. You guys have seen the last, 6 months, probably 8 months now that I've been trading super small, even in the sim half the time, just because I've been exploring this whole futures market and figuring out how I want to trade it, what I want to do with it, rather than, the hundreds of thousands of dollars per day in the options trading, which was 12 months ago. So it's worth the time to just go and explore and fly with your curiosity. Just check it out. You never know what you come across. You might come across something that's so simple and so easy for you. That's it. It makes your whole life. It's amazing. So no rush. Don't rush into this trading stuff. That's the real killer. People get way overexcited. The market's always going to be here. Always, always, always. All right, let's look at this one here. We've been watching this break and retest. Let's go to the 1 minute. Yeah. So there's the 1 minute consolidation, breakout, the retest. Look at that. It's almost a second and a third retest. It's, again, it's very tempting, especially with that reverse hammer. I wasn't watching it in real time. I was looking at something else, but reverse hammer, and then the new low is the entry, the stop above it, and you're going for the target. But I think that's just in isolation. Overall, I want to see with the breakout first. I want to see a good aggressive breakout, which this kind of broke out and then chopped around and then went. So it's a bit tricky. It's not very clean as a breakout is concerned. And then I want to see that after it has a fast move, it comes back slower than it went out. Right? I want to see that asymmetry in the timing of the price. So it went down fast, it came up slow. That's ideal. That's telling me the sellers are firmly in charge. The buyers are just kind of, probably just getting stopped out, not really buying up. And then one retest, ideally that's, not two. Two is a real problem. One retest, ideally with a reverse hammer, and then you can get into it. So all those elements are not here, not quite lining up. And sure enough, you can see it's getting really messy. It's not something I want to be a part of. I wouldn't want to have risk on and then it starts doing this. So A lot of subtle little details you want to be careful of. It's not just that you wait for the breakout, then catch the retest. These are a few more details in there just to help with your win rate. I mean, this could easily go down. It could easily not go or go up. I don't know what it's going to do. But when the setup is absolutely right or near perfect, then I have the confidence to put the risk on and leave it for 10R or whatever the target is. But when it looks like this, there's no point at all. No point doing this. So leave it alone. After that clean move down, it's been tricky. You haven't had a genuine consolidation to a breakout to a retest. It's been very complicated. This was the only good looking consolidation to begin with. Then the breakout was not looking good. Now the retest not looking good. So these are the details. And now people tell me you can get AI to point out the signals to you and take these entries and all. I don't know how AI can figure out these details. I don't know. It's in my head. I can't even write it down. It's too much to write down. So, if you guys know how to make these algorithms do this stuff, then okay, do it. But let me know. It'd be funny. I'd like to see that. Again, on the reversal side of things, look at this. Firmly in one direction, lots of speed, and then the reversal. That's what you want. That's when you get the reversals to really work. You get it firmly in one direction, not just chopping and grinding down. This has been going down, but grinding down, and then you think you're going to catch a reversal. No. You want a firm, smooth, fast trend. And sure enough, it gave you that bullish engulfing right here. Some people like to trade that for a reversal. I don't like that, but you would have got something out of it at least if you were into it. Didn't go all the way back up, but on these reversals, even if you just target halfway of the move, it would have been okay, which I think it looks like it went just about halfway. Close to it. Yeah. Anyways, now I'm not thinking bullish at all on this one. All bearish. On the 15-minute, again, the bigger picture here is, if you just zoom out, you see this is, once it broke up here, it just kept bouncing here. This is what the buyer's been buying. And only now it's broken below it. So the sellers may well be taking over. But I want to see them truly take over with a clean pattern. Like I said, the break and retest, I want it to be super clean. And then you have it. Today may not be the day for that. But we'll see. All right. What else, guys? What else is on your minds? Anyone got any unbelievably complicated strategy we can talk about? Show me the 30 indicators you have with the 5 screens. I want to see that. I haven't seen one of those in a while.
Those times are over since we found you.
Yeah. They better be over.
I will not use any names here because there are some people who think I'm doing bad mouth thing here. But I used to be in another group when I found you, and I know they used to have different strategies, and I was looking at them. They used to have funny names with angels, devils in it. And when I saw your naked trading, and I was, oh God, probably it's some dude. He doesn't have any shirts and says, hey, you have to feel the nature while you're trading. Why otherwise would he use the expression naked trading? And when you're talking, we are not using anything here, only the chart with the candle, and that's it. And I thought, oh, that's going to be my strategy for the future. I will make it work.
Awesome. Good to hear, man. Inspiring stories. Yeah, when you find what resonates with you, just flow in that direction. There you go. Yep. And the whole trading world is full of that stuff. I was also part of that group. What a freaking mess. What a disaster, really. Make it so complex, then you can sell it. Oh, look, buy this complicated thing with all these parts to it. You gotta buy it. You gotta pay for it. That's the whole doctrine. These guys are making more money selling courses than actually trading. That's the truth about it.
Share the screen for 1 second again, because I'd like to show something else again, because I forgot to say.
Yeah, go ahead.
Okay, thank you. What is it? Is it sharing?
Not yet.
Do you see my screen?
Nope, I've stopped sharing. Now you should be able to bring yours up. I don't see it. Anyone see your screen?
Let me try again. Okay. Now you should see my screen.
Yep, we got it. I see
Okay.
it.
Do you remember when I said, for example, here it took 3 candles actually to come back to the opening price here, or near the opening price or the low of it?
Yep.
Okay, same goes for the other one. If you have a huge candle, if it goes back to, for example, to all those 3 candles here, it does not. Can you see my screens?
Yeah, I can see it. Yeah.
Because okay, somehow my Google Meet is here frozen, and you see I have a huge candle here, which does not mean an engulfing. You have to understand, since we have a range here, it probably means it needs to come down here, because I took also a short here only with 100 stock again. And the things that I was showing here when it comes to the closing price, I said, okay, not 200, 100, because I wanted to test something. It's going to be nearby here, for example. If I see here the closing price here, the opening price here, the closing price here, and the opening again, they're respecting here something. Okay, we don't have any candle that opens or close under this, let's say, area. So it was possible to take and trade here too. What I'm trying to say, it's not always an engulfing candle here. That could also mean, okay, I went up, now I need to come down again. That's not probably a bullish candle, since we have a range here.
Yeah, we got a range there. No room to the left. It gets a little messy.
Exactly, as we see here. And that was also a trade that I took from here to here, and my stop again, but that was 100. That was not 200, because I had already made my money here. Don't overtrade here. And again, my stop loss was somewhere, I think here, something like that. And yeah, and that trade was again 127 or something like that. But for example, if someone missed out on that one here, the opposite as well. But there are some reasons that you have to understand that here. So that could also be an engulfing candles, but in that meaning, it needs to be in range here. So it's moving between those two actually.
Yeah, you're range trading basically.
Yeah, here, for example. But since I got in good R here, for example, the R was somewhere, I don't know, 127, I think, or even more, 127 something, for example. And that was actually a good trade too.
Nice. Yeah, that's good RVR, man.
Trying to say to everyone here is, don't try to catch each of them. If you got one, for example, then leave the market. The best traders are those who make their money and then leave them market. Don't overtrade here. Making money is easy, but to hold to that money, that's the difficult part here.
Yes, it is. That's a tough one. Making it, and you get overconfident, and then you start doing silly things. And
if anyone has that question, I would stop sharing again. No one? Okay.
All good. You could possibly use those, not candles. What are they called? Well, it's just the high, low, and the close. I don't even know what they're called anymore. Was it, bars, price bars.
Okay.
For what you're trying to do, that might be enough. It's simpler than candlesticks. Try that out.
Bars. I see here what you're talking about.
Yeah, price bars, and then there's also, I mean, there's so many different. There's what do you call Heineken candles, or Heiken-nashi, or Heineken?
Yeah.
Whatever. I don't even know.
Those what was there again? Something, yeah.
There's so many.
Or something like that.
Yeah, so, give it a go. If you're getting the information you need, you don't need anything else on the screen. You don't need the Wicks, perhaps. So you could just go with that. That works too. It depends on your style, but check those out. Might be easier, even easier. Yeah. Cool. All right. Got my screen back up here as well. Yeah, sure enough, you can see this price action has all the indications that it's a really messy break and retest. Now you're beginning to really see these higher lows as well, right? So you had not a great break, not a good retest. Now higher lows. Well, the whole idea of going short in this area definitely out of the picture. Long, I don't even see it yet. Not yet. The buyers were here, now they're lower. So it's a messy zone. This could just be a mess. When I see something like this, I would consider this whole thing just a chop zone now and wait for the breakout up or down. Don't trade inside this zone, at least for my style, which is a bit different than what Parsa was saying. He's saying you look at the open and the close and you can go inside the range. That works if you're into that. My style is a little bit different, looking to go away from it.
I would not encourage people to do that with the futures market. I'm only for the New York session for Tesla or AMD. If the first half or 1 hour seems to be a range, for example, and if the R is okay, 1 to 5, 1 to 4, something like that, then you can try to do that, and you can try to buy half of what you usually do, for example.
Yeah, good. Yeah, thanks. Those details are important, guys.
We're not talking futures is totally different when it comes then to stock market. You have to know which one you are trading. I wish I could trade the same that I do here, but with the US stock market, it's not possible. For example, it's too volatile and you don't have that much hundred of dollars of movement, for example, that only you can have some with things like S&P 500 or Nasdaq 100. But when it comes to Tesla or AMD, for example, volatile stocks where you have at least $15 movement, there is possible to make money there too. But don't put a lot of money there, only 100 up to 300 shares, not more actually. I would even people encourage to start only with 50. When you start to making money, for example, you can try to increase it, for example. Because as you see, even with 100, you can make $700, $800 or euro, whatever. You need to work a whole week for that if you want to have a 9-to-5 job, for example.
Yeah. Are you doing this with the prop firm? Is that right?
Yeah, with FDMO, as I told you, for example.
Yeah.
Okay. But they have different leverage there. For example, I have a 100K, and you have to decide if you like to have a swing or the standard account. If you like to have a swing account for the future market, you don't get a 1 to 50 leverage. You get 1 to 30, as I sent to you. But if you do it with CFD for Tesla and AMD, because you have the CFD there, and you have to have 1 to 3.3. If you have the standard one, if you like to do a swing trade, it's only 1. So you don't get any leverage there. So I would not encourage with prop firms to do swing trading, because even with the S&P 500 and Nasdaq 100, you can easily make your money during the day, 1 to 5, 1 to 7 hour. And if you stick to the strategy, believe me, most of the time, 80-90%, that means from 10 trades, 8 to 9, it's gonna hit your target. Only 1 or 2 would hit your stop loss. I'm talking from experience in the last couple months, actually.
Cool. Thank you. There you go, guys. There you go. Prop firms and how they work. Talk to Parsa. He knows. A lot of guys in here know that. I'm the one person who doesn't know anything about prop firms. So there you go. You got everyone else in here.
Don't risk your own money. That's the only thing that I'm saying. You only pay once, and even if you pass the challenge, you will get your money back. So it was all for free.
Nice. It's great. No, it works.
Yeah, money that you're paying is not that much money. It's only a couple $100, and you will get that money back.
It's tempting, man. I get tempted.
Yeah.
I'm like, really? Why don't I just go ahead and get like 20 prop firm accounts and set some replicate trading things? So when I enter a position, it enters in all of them. Make $1,000 each one of them.
Try to do it with once, actually. Once you see the results, you can increase it step by step, actually.
You can, yeah. I've never done any of that stuff. I've always just taken care of my own money, but something to explore, Yeah. Could be good. That way I can put my funds to other investments. Don't have to keep it in a day trading account. Cool. What do we got here? Ronak, could you please do a quick backtesting session for the 15-minute momentum strategy? Backtesting. Okay. Sure. Let's do that right now. I feel like I've backtested. I feel like I backtest every day of my life. I spend probably hours backtesting. Most of the time I'm looking at charts I'm just looking at previous price action. And I do spend a lot of hours looking at charts. All right, let's get these levels down in this area. We'll go back here. This was May. Oh, May 3rd. This is only recent. Let's go further back. Let's zoom out a bit more. What do we have? What do we have? What do you have? Okay, way back here. Get the levels down in there. Okay, there we go. That makes sense. Where do you want to go? This is March. Okay, let's look at March. Okay, we're in this area. So a few months ago. Oh, look at that. I got some old levels here. Anyways. All right. So momentum 15-minute chart. What I'm looking at is I look at a chart and I don't have any levels on it. All right. It's just price action, candles moving around. So watching this thing, I'm looking for momentum. Right here, you can see it was going nowhere and then suddenly a big candle, right? And when I see a big candle like this, you know, the chart looks like that, right? Like that. This big candle goes, it pushes right down and closes. There was momentum in this compared to just recently. But with that big wick over there, I don't care what happens next. I'm not going to play with this. Leave it alone, right? So there is momentum, but not the way I like to see it. Sure enough, it went the other way. Now, going the other way, you can see this one right there. This one also now has momentum on it. But again, the same problem on the downside, right? So I'd be super careful. This is not something I want to play with. Now, look just to the left a little more. You can see it right here. I see this bullish candle. This one has a wick on it. Then another bullish candle. Then another one. You know, after this third one, I'd be tempted, I think. So I would bring the level and I would look in this area. You see these, let's look at it here. 1, 2, 3. These three, the candles look like this. Once it closes like this, I'm going to say, okay, now it looks like there's momentum in this. It wants to go up. So once this closes, I'll look to the left and see, is there a level, a specific level that it may be breaking out from? My eyes go to this because you can see the wick is here and it's in the same place. So that level makes sense. So then I'm waiting for the retest and go. But the problem I have here is that right up here, I know there's sellers. So it's a small trade. It may not be good with the RVR. In this case, it did work out. You can possibly get the good entry here on the 1-minute chart, maybe get 10 to 1 there, maybe. But it looks really tight. So that one, anyways, as far as setup is concerned, it looks like it would have been there. But the reward side not there, I wouldn't take it. So let's move on. Let's see. Now, again, you have all this price action, a whole lot of nothing. What do we see? Again, room to the left is key, right? This is all chopped. There's no room to the left right in the middle of this. Even here, look at that. Every candle is overlapping each other. Nothing here. It went up. It came back down. Then bearish candle, but look, it's stuck right in the middle. Now over here, I'm seeing 3 white candles. That's interesting. One, second one smaller, then a big one again. So I'm thinking this is perhaps resistance. As soon as this white one closes, there's resistance. Come back and bounce off. Now on the 15-minute chart, it wasn't there. But on the 1 minute, you may have seen a break in retest and go. And if it didn't give the retest, I wouldn't even enter. But if it did give the retest, I would have entered and taken the stop out. And the target on this one was likely going to be up here. So this could have had a decent move in it. So just keep going, looking for momentum. Here you got all these wicks. You got lots of bullish activity. This big one, but it's a little tricky because after this big white one closes, you could put the level right on this previous candle. You can see that had momentum and it got shot down, but then it broke right out. So that's perhaps a breakout area, or would you just go right here? That's a tricky question, right? So over here, if you put it and you try to catch the retest, well, then you're going to have to take it off here. There's no room to make money. So you're looking at this area, but what you want to see is momentum breaking out, coming back and bouncing, which on the 15-minute chart, there was no momentum going through the level. I want to see momentum. Nothing here. So there's no way I would touch anything in this area. Well, look at that one. So again, here all sideways. This is a reversal thing, but that's a different concept altogether. So here you have this candle, then you have the big one. It's got the wicks, buying wick there. I don't think I would play with this at all. It's just way too big. There's nothing. Unless you're able to observe the reversal and go, that's another situation. This is not what I would trade with the momentum strategy I'm using. And then what else do we have? Let's see. Yeah, these are just big candles going around. This is interesting right here. You see this one where it's had momentum going down. You got a pullback and more momentum going down. And now this one's interesting. This is very bearish, right? All bearish. And it looks like it may have just broken out of where these 3 wicks are. Support, 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 breakout. So wait for the retest. If you're catching that, your target's down here. And it never looks like it didn't give it to you. This looks like it was all bearish and then reversed upwards. If you look at the 1 minute, you may see something different. But anyways, the point is once this candle closed, it never came back to give you a retest, right? And when it did come back, it was after this hammer here. So there's no way I'd consider this a retest. Forget about it. It's on its way. On the other side, you have this big one going, and then it has a smaller candle and then go. This is very complicated, but this one big one, I like it. I think there's momentum here. You could consider that you can even put 2 levels on this. You have one here, so if it comes back, bounces off, but that's a big retracement, right? A little tricky. But over here again, you can see these wicks right here. This was resistance. There's your retest. That one's a long for sure. And on the 1 minute, you probably see a good one here. Probably 2 opportunities to enter, even with a higher low. And you can target this area. On a 1 minute chart, you'll probably get something good out of this. So that one would have been okay. What else do we have? Let's see. These candles start going down as soon as you see, especially this big one. You have this bearish, this bit of indecision, but this one really goes, and you can see very easily that this was support, breakdown. You'd leave it there, wait for it to retest. It never gave you the retest. It just went. Looks like the market closed over there. But you see, that's all I'm looking at. I'm looking at the price action first, and then I'm putting a level to catch the pullback. Look at it as a pullback. Really, it's a retest of the breakout. So like right here. Momentum. Once I identify there is price on the move, then I'll look to the left, find if it did break out from anywhere. In this case, it did. Then you retest, then you go. And I'm only using this one instrument, just the ES. I'm not bothered with anything else. So very straightforward momentum. But that's the basic version of it. I've evolved it a little bit, and I've got a few different variations. So once, yeah, it's showing itself right here. You got this massive amount of momentum, right? I don't have a level anywhere on it. And when the pullback happens, then I'm looking for this stuff right here. Reverse hammers. Basically, during the pullback, big old hammer with room to the left. Once I see that, then it's interesting. So in this case, I would first see this hammer. So I put the level right at the bottom of that and see if I can get an entry underneath it. And then it gives you another one with even more room to the left at the top. So I'd put the level at the bottom of that one, see if I can catch the break and retest down here. It looks like it never did any of that stuff. As soon as this one goes back up in through that level, I'm not interested. I wanted to, with that hammer, go down, retest, and go. It didn't do that in this case. But this is very important to have this in context. You're looking at a firm direction and then a pullback from that direction, right? Let's see if we can find a few more of these. You need a really good trend to begin with. This one's here. This is really nasty. You can see all the wicks. But I would, no, this is more complicated. See, it's got a trend going. It's not clean. You have the pullback, lots of wicks. And this one is the one with room to the left, but it's not a reverse hammer, right? When it does do the reverse hammer here, there's no room on it. So no, nothing here. What do we have? Let's keep going. You got a big trend here. Where's the pullback? I don't see much with this. Looking for that hammer. Nope. I don't see anything here. There's nothing in this. Anyways, these are all 15-minute candles. So it's actually still relatively fast. Well, you find plenty of those momentum situations, but I'm trying to find those hammers, which you can see they're not very common. Got this one here. That's interesting. Let's see. See it? This is a big bullish move. Then it puts in this hammer. But right away after the hammer, there's no momentum immediately right away. Right? It messes around, then it goes. So I'm not going to touch that. What else do we have? This one goes up, comes down. You can see this reverse hammer right here. Right in this one. But this is the opposite. You don't just go short here for this style of trading. You have this in a bullish move. Then on the pullback or on the consolidation, you want a bullish hammer. This is a bearish hammer. If you're going to trade this short, this is a reversal. A completely different situation. And actually, I think this reversal makes some sense because you have an area where it was resistance previously. It was very bullish, very aggressive, getting up there. And then it put in this reverse hammer with lots of room to the left. And so you can put the level then right at the bottom of that hammer, and pretty quickly it starts to go from there, go down. That's where on the 1 minute, I want to see the break and retest, and off you go. So trading reversals, this is the way I would do it now. No big deal. I missed a couple of these in the last couple of days. We've had a few. What else? Let's see, you got momentum going here. Look at these big white candles. This is the obvious resistance area, or even up here if you like. Got close, right? Got close to the retest. Didn't quite happen. Here's your reversal, but this one I don't like because this is still a white candle, not a gray candle. What else? Lots of momentum here, but really choppy. Don't want to play with it. But anyways, yeah, that's the style. It's basically what I'm looking at. Does that make sense, Ronak? So it's always price action first. I've just reversed the order in which I do things. I used to always put levels on the chart and then wait for the price to get there and then see what it wants to do at the level. Now I'm the other way around. I'm watching the price. I'm seeing what is the price doing. Is it on the move? If it's on the move, then I'll investigate further and see if there's a good place to enter. And that's basically it. And I like it because it suits this whole futures trading thing that I'm doing with massive moves, and because the market's open all the time and a price can start moving from anywhere on the chart. So it's only when it starts moving that I'll start paying attention. I don't care if there's a level there or not. I'll find a level there if I need to, so that's about it.
Other questions. In this MES, you identified a range that previously you said it bounced on and off. Like in these scenarios, could you explain, like, if you were to do reversal, how would you do it?
Yeah, reversal, sure. I saw some earlier. Let me see if I can find them again somewhere. Yeah, this area. So if you look at this, for reversals, there's a couple of things you need. Firstly, again, beyond anything else, you need momentum. You need the price to be moving. In this case, look at this, firmly going down, right? It's on the move. It's not chopping sideways like over here. This is on the move. Perfect. Then you want to see, what I like to see first is a reversal pattern. Now, right here, you're getting a double bottom. It's not a perfect one because the second bottom is lower than the first. But for most people, this is a perfect double bottom. So I'd say it's 90%. All right. When I see this whole thing where it's been in one direction, then a reversal price pattern, then I'll look to the left and see, is this an area where it has reversed from before? Were there buyers here before? And it was true. It was just the previous day, right in this area, right? So I have everything in place. You have three elements here. One is it's firmly directional. Secondly, getting the reversal set up. And thirdly, it's all happening at a key point where it has happened just before. Once you have that, then the reversal is eligible. And if you don't know where to target, just target halfway. So if that's the top, that's the bottom, that's about halfway. That's basically the reversal. That's all I'm doing. You're getting the same thing at the top here. You can look at this price action. Well, let's look at it this way. This thing is firmly bullish, right? And then here you have very bullish candle, then it's slowed down. This third candle here, more indecision, right? You can see the momentum was there, now it's dying. And then you get the massive reverse hammer with room to the left. That's your reversal setup, and it's happened at a key level. Look at that. That was a reversal just previously. Now it's eligible. You find your entry, and depending on how you would have entered, if you had your stop above it, you could have survived all this and would have caught most of this move today.
If that candle is a white candle, would you still consider as a good setup?
Over here?
Yeah.
No, I want it to be in the direction I want. This is out. If I'm looking for a bearish move, this better be a bearish candle, not white. Otherwise, I'm not going to play with it. Absolutely not. Let's look at it right now. I think in real time we have something going on here. Look at the prices in this area. Let's just put the level there. Let's see. Was there something here? Yeah, look at that. Very interesting. This was resistance. You had the breakout, and right now it's come back, turning resistance into support, possibly. Well, it looks like it is because it's moving up. So if you had a reversal setup, which I don't see that we had one, if you had one here, this would have been an eligible reversal, I'd say. And as far as the target's concerned, that's the top. Just go halfway. That's about there, 7600. You have a price action right there. You can just go up to that point. But on a 15-minute, I don't see a reversal pattern. So the other way to do it is, now you see that this was consolidation. You're getting the breakout now. Wait for the retest. So I put it just about there. You can see those two wicks. Breakout, wait for the retest. Maybe you can still catch us. All there. Yeah, Parsa, go ahead.
What I would encourage people to do to have two windows when you're trading on your I don't know, a laptop or computer. Have two windows actually. In one you have 15 minutes zoom in like this, and in the other one you have it zoomed out like an eagle, for example. So to see the bigger picture here, sometimes I missed out on some good trades because I was zoomed in. So you can have it like this, or to have in one window or in two windows. If you don't have that much on a monitor and only one, and you can zoom out, for example, like the right one, what Avi is doing. So both are 15 minutes, but in the one you're seeing the bigger picture, for example, on at the previous day as well. But and in the other one where you zoom in, you've seen the current candle and in the last couple 15 minutes or a couple hours or stuff like that.
Yeah, that works. Yeah. Same time frames, but one zoomed out, one zoomed in.
For example, for some time only to trade in 15 minutes only, if it's possible to see again some 15 candles closes with the wick, and it shows a weakness, it shows an is reversal sign or stuff like that, or maybe to go sometimes in 5 minutes if it's necessary. Otherwise, when I'm trying to catch the entry point in 1 minute, I'm doing a lot of over trading. So if you want to avoid that, that would be something that I would give you as a tip from one amateur trader here.
Nah, don't tell yourself you're an amateur. If you keep saying that, you'll stay that way. You're reinforcing it in your own head. I'm an amateur. You're always going to be that. You know what you're doing. Just assume that. Assume you know what you're doing. And, you know, it's funny. You just make it real. But good points on time frames and different ways of seeing it. Personally, I've always used 2 different time frames like this, you know, side by side. But yeah, it's a good one. Keep them on the same time frame too, and one zoomed in, one zoomed out, if that works for you. Never seen that before, actually. It's pretty cool. Something new. Yeah. So right here, if we were looking at this reversal coming down, looks like the reversal is happening. We identified this is the reversal area, but no reversal setup yet. The setup I do see is a consolidation right here, and the momentum. You can see these white candles. It's going through, just the momentum thing we were talking about. That looks like it was resistance. That's the breakout area. So you can see that it broke out. This is very hard to call a retest because, you know, there's no room in it. But now it seems to have gone. If it comes back, maybe there's a potential retest. And here's the fun part on this. You don't, I think I would prefer it if it doesn't come all the way back to the line. If it comes back and retests this tiny resistance on this 1 minute chart, that would be more interesting to enter here in this area with a stop right below it, considering this tiny 1 minute resistance retest of that. Because you can see even here, let's just zoom this in a lot. You can really see it. So if we move the line, so what I'm talking about is this candle right here. Oh, where is it? There we go. That's the resistance. That's the breakout. The breakout's clean, not perfect, but clean. If it comes back and retests and it's got some room already, it looks like, and gives us a clean retest, and there's an entry in this area, stop below it, and off you go, if all that happens. Well, that could be a fun one. What time is it? It's at 2 p.m. now. I don't like taking trades at this time of the day because when I get into these, then I need to leave them for 10 hours. I just put that in my head all the time. But you never know. It could be a good fast one. Back to the 15. The real big picture is here. There. Rick already kind of did a retest, but not really. So yeah, I'm trying to catch it on the 1 minute. But again, going back to the 15, if you like it this way, Parsa was talking about trading the 15. You identify this area, you identify the momentum, you identify the resistance and the breakout, and you can perhaps enter on the 15. You got to find some category where you enter. Parsa is using the opens and closes and various things. If I was going to do it like this, I would probably, with this live candle, I would put the entry right here when it made a new high, and the stop below this candle, below the live candle right there. So just about where it is would be my entry. So it's a decently wide stop. And then the target would be this zone. That gives you about 3 to 1.
If you note here, the lowest candle that you see, the lowest candle below, actually, yes, that one. If you zoom out there, you will see that I used to have there, and yes, I used to have there an level as well. So with the closing price, I would have gone into the position for long, and the stop loss would have been below the below the wick, and the target would have been somewhere, I don't know, before the market close, hopefully at least hopefully 125 or 127 trade or even more.
Nice. Yeah, that's awesome. You have a method to get in long down here, huh? I love that.
Because if you zoom in again, for example,
Yeah, down here. Yeah.
as you
The
see,
close.
the candle, the red one, tries to close below the wick, but it's not doing that. So we saw some weakness here. So with that said, because truth to be told, I had tried to even catch it with the candle before. If you look at it, it's the thing that I tried to say. If you have a big wick, for example, a couple candles, if you go back actually, the candle with the big, yeah, exactly.
Yeah.
Then you have a candle who close nearby or below it. That's gonna be the candle that I was talking about, for example. I would try to catch it there, but probably my stop loss would have gotten hit with the candles, and then after that I would try it again, and then probably hopefully had a good long trade then.
Yeah, I see it. Yeah, you know what would make sense for you? I think change your candles to just show high and low. It might actually work with the close as well, high, low, and close. Let's see if we can high, low area on this, because for what you're talking about, there are different kind of candles you can use. I'm not really familiar with them, but take a look, because they, you know, it might make your life actually easier. So I see what you're doing here. It makes sense. You don't really need all the details that a candlestick gives you.
No.
So try it out.
For example, with the candle that was trying there to close the below it, that means one before, yeah, that one I would have got in, but probably the other one would have hit my stop loss. But with the other one, I would still get in, and this time I probably, yes, we have to wait to see. And at least at that point, maybe I reduce my stop loss sometimes. I bring it to the half, for example. If you have $200 stop loss, I bring it then to 100 at least, not the break even. So
I know what you mean. Yeah, I like it. You can. I think it's what you're. I think on a good thing here.
I don't need one in a minute. That's it. Sometimes I miss out, yes, but probably most of the time, instead of over trading it with, I don't know, 5 or 10 trades a day, I have only one good one or two, and that's it. For example, I don't need any more.
Yeah, no, perfect. Keep it slow, keep it simple. It's good. Keep refining it. I think there's a lot of potential in what you're doing. It can get bigger.
Because is it possible only to use one time frame? Yes, it is possible. The reason why I was thinking sometimes with 30 minutes, 1 hour, or 4 hours, they are too big actually. They're too big and wait, you don't know what's happening. You're missing out even on a 30-minute chart. And then I tried it with 15, 5 minutes, and 1 minute, 1 minute, or 2 minutes. It's I'm sorry for the language, but it's full of shit actually. I cannot work with those actually. It's too noisy there. And with the 5 minutes, you are getting mixed signals there as well. But with the 15 minutes, it's the most clear one actually. It doesn't matter if you use it for the stock market that I showed or here. Only the strategies differs here, but the candles are still the same actually. Yes, sometimes your stop loss get hit, but it should be sometimes. You need that as well. There is no holy grail here. You have to accept that even the best day traders in the world, they stop loss get hit. Even Warren Buffett loses money on some trades, what he's doing. And you have to accept that. And you have to accept that even the best strategy is working maybe 80 to 90%, even if it comes that much close, actually. So and if today is not your day, then that's it. You did 2 trades or even 3 trades, and you came to break even or with a loss, accept it. Tomorrow it's going to be a new day. It's a new day. It's a new dollar.
Yeah, very good. That's it. You got the psychology in the right place, and you're using that to build out your strategy. That's it. Keep going. You're on a good track. So keep going. You got momentum on your side. Yeah. Good. Great. Thanks for sharing all that, Parsa. Solid stuff. Well, guys, it's just ticked over 10 p.m. here, so I think that's about it. My brain is about to shut down. Anything else you'd like to discuss before we end? Everyone good? You all know what to do with levels, momentum, 15-minute charts, 1-minute charts, all the fun stuff. All right. Cool. Well, thanks for hanging out, guys. Thanks for coming on. We'll try and come back again tomorrow and do this again. Thanks a lot, guys. I'll talk to y'all soon.
Thank you, guys. Have a good one. Bye-bye.